Hi everyone, today I am going to talk about how LLCs are taxed. So a lot of people will come to us and say, I have an LLC, when we ask how they are taxed. And LLCs are very flexible in terms of taxation. So I'm going to explain how LLCs are taxed and how to figure out how your LLC is taxed and what that means for what forms you have to file. So an LLC, its default taxation is going to be determined by the number of owners, okay? So if there is one owner of an LLC, it is automatically taxed as a sole proprietorship, okay? Sole proprietorships file Schedule C, which is part of your Form 1040. This is on the federal side, right? So you may have some state and local taxes that may differ from your federal tax treatment, but when you look at a federal sole proprietorship, you are filing a Schedule C. There's a couple of exceptions. One would be if you are a farmer, in which you would file a Schedule F. Schedule F is also part of your personal tax return, that Form 1040. Or if you had a rental, you would then have a Schedule E. Okay, so if you have one owner and an LLC, by default, you are taxed as a sole proprietorship. Now, if there's one owner, you can also elect to have that LLC taxed as an S corporation or a C corporation, assuming that your LLC is eligible. Okay, so there's some eligibility requirements in order to be taxed as an S corporation or a C corporation. So if you have formed an LLC, and there's one owner of that LLC, you're going to automatically be taxed as a sole proprietorship. You can then elect to be taxed as an S corporation or a C corporation, as long as the LLC is eligible, okay? An S corporation and a C corporation both file their own tax return. So it's completely different from a sole proprietorship, which is filed on that Form 1040. An S corporation and a C corporation actually have a completely separate tax return, okay, on the federal level. Now remember, you may have other returns that you need to file on the state or local level. Now let's talk about an LLC with more than one owner. There's a little bit of an exception here for an LLC that has two owners who are married to each other. Okay, so if you have a married couple that owns an LLC, technically it is automatically taxed as a partnership, okay? But there are some instances if you are in a community property state. There's very few community property states, okay? But if you are in a community property state and you have an LLC and there's only two owners, and those two owners are married to each other, okay? So it has to be a married couple in business together. You can treat that business as a qualified joint venture. Okay, a qualified joint venture is where you are splitting the activity in that business onto two Schedule Cs. Okay, so two sole proprietorships essentially. However, by default, that business is taxed as a partnership. A partnership has a separate tax return, Form 1040 on the federal level. Okay. If you have a partnership that is owned by two or more, a LLC that is owned by two or more individuals, it is automatically taxed as a partnership, okay? And as long as you are not like two married individuals in a community property state, it's automatically taxed as a partnership, and you can elect to then have it taxed as an S corporation or a C corporation, okay? Again, an S corporation and a C corporation have their own tax return, but so does a partnership. A partnership has its own tax return, Form 1065. This is on the federal level, right? So on the state or local level, you may have other tax treatment that you need to take into account. So let me rehash how that works, okay? If you have formed an LLC, in order to determine how it is taxed, you first need to determine how many owners that LLC is owned by. If there's one owner, it is automatically taxed as a sole proprietorship. A sole proprietorship is filed with the Form 1040 on that personal tax return. Okay? A sole proprietor LLC can elect to be treated at the federal level as an S corporation or a C corporation. As long as that LLC is eligible, there's certain requirements for being taxed as an S corporation in terms of the type of shareholder. Okay? Now, if you have more than one owner for the LLC, the default is a partnership. Okay, that is the default tax treatment. A partnership, that LLC with 2 or more owners, can elect to be taxed as an S corporation or a C corporation as long as it's eligible, right? So there's some eligibility requirements for an S corporation. And if that LLC is only owned by 2 individuals, and those 2 individuals are a married couple, okay, they're married together, right? So it's not like it's owned by 2 individuals. This individual is married to this person and this individual is married to somebody else, right? They're to be married to each other. If it is a community property state, there is a qualified joint venture option. Now, why would you elect to be taxed as a qualified joint venture? Because you don't have that separate tax return, okay? It's cheaper, essentially, to prepare for taxes. So if you have a sole proprietor, that return at the federal level is due on your individual tax return April 15th, or if April 15th falls on a weekend or holiday, it's going to be the next business day. If you have a LLC that is taxed as a partnership or an S corporation, that due date is actually a month earlier, okay, for that tax return. It's due March 15th for calendar year S corporations and partnerships. If you have a LLC that is taxed as a C corporation, that return is also due April 15th as long as it is a calendar year corporation, C corporation, okay? So saying that you have an LLC does not mean that doesn't tell us how that entity is taxed, okay? We need to know the number of owners and if you've made any sort of tax elections, all right? Hopefully that was helpful, and I will see you guys next week.